Hi, this is Daniela Cambone in Fort Lauderdale, Florida, where we just wrapped a fantastic Gold Stock Analyst Day. Here to tell you that our beloved guest, Rick Rule, who is one of the people I respect most in the natural resource sector, is partnering with my company, Stansberry Research, in a major way. It's something we have never done before, and it could be a pivotal moment for you personally. Rick warns that we are at a unique moment in history, the likes of which he has never seen in his 50 years of investing in the natural resource sector. And he says if you get this one thing right, you may never have to worry about money ever again. So for all the details of his big prediction and the project that Rick is working on, go to rickevent.com right now. Again, that's rickevent.com to hear about the once-in-a-lifetime financial event Rick says is happening right now and will impact nearly every asset you own. Let's get to our segment today. Hi, this is Daniela Cambone. Continuing with our coverage here from Gold Stock Analyst Day, we've had to move indoors due to the extreme heat outdoors. Paul, you've saved yourself from that. So welcome to the show, Paul Brink, CEO of Franco-Nevada. Nice to see you again.
Daniela, super to see you.
Yeah,
Thanks for hosting me.
Absolutely. I was really excited to get your thoughts, given everything happening in the mining space. And it's been a few years now since we've last spoken. So I want to talk Franco, obviously. Want to get your thoughts on the merger and acquisition activity happening in the space. Obviously talk gold price. But let's start with Franco, right? 26 billion US valuation, yet you're trading at a much higher price than your peers in the space. The question I get a lot, and I'm going to pose to you now, is Franco worth that price tag? How do you make the case for it?
We did a bunch of work on this a couple of years ago to try and understand, why we trade where we do, and Franco has typically traded at a good NAV premium at a good cash flow multiple. One of the distinguishing factors on our business, though, is most of our interests are top-line interests. They're royalties, they're streams, so they're not impacted by cost inflation. One of the things the analysts do in the industry is they value everybody on the same discount rate,
right.
A 5% discount rate. And so we said, well, what happens if you take inflation out of that and adjust our discount rate low just for a 2% inflation rate difference? And what we found is we actually trade pretty much in line with the better senior gold companies just with that one adjustment. But then if you look at our business, we have a much higher margin business. Our EBITDA margins are around 85%. We also have a much more powerful option on a property. Both an operator and ourselves, you buy into mining property hoping that there's going to be more, and if there's more, you benefit. The difference for a royalty and streaming company is we both have that same option, but for an operating company, you need to pay for the option. You need to pay the capital, the exploration costs, the operating costs to mine those incremental ounces. For a royalty or stream ounces, if there is that upside, it's a free option. And so there's a much greater optionality value that is in the company. I think those are probably the two biggest differences, the biggest reasons for that difference in valuation.
It's interesting because people will say, well, Franco-Nevada, you guys are the king, of the space. Where do you grow from here? How do you grow from here?
We've been so fortunate in being able to grow the business the way that we have. Started as a royalty company, buying 1 or 2% royalties on a lot of gold properties. Really where we've been able to grow more meaningful in recent years is through streaming. And it's an opportunity that really you don't have for the gold operators, that we can buy the byproduct streams out of copper mines. Copper mines tend to be much bigger mines than gold mines. And so all the big streaming deals have been in that space. And it really has given us an additional avenue for growth that you don't have just as a gold company.
And just, you mentioned inflation before, and offline you were saying how Franco actually benefits from higher inflation. Explain that, because other miners are obviously feeling the pain of inflation.
Well, it's two things. First, with top-line interests, when you have cost inflation in the industry, it doesn't impact us. Our business is a bit unique in that most of our investments are in precious metals.
Right.
We do also invest in the energy space. So we have typically 20% of our revenue coming from energy. If you look at 2022, it's going to be closer to 30%, and with the run-up in energy prices. So this, part of what's driving industry cost inflation right now is higher energy prices. We're actually a beneficiary of that.
Let's talk about some of the challenges you've recently faced at Cobre Panama. How are you looking to overcome that here?
So Cobre is our largest single investment, a very large copper mine run by First Quantum in Panama. They have since 2019 been negotiating with the government of Panama on a new tax agreement. The government did at the end of last year give an ultimatum in terms of reaching an agreement. Right. And has taken some steps that actually resulted in First Quantum having to curtail production at the end of last week while they go through that negotiation. At the end of the day, Cobre Panama is along with the Panama Canal, the biggest revenue generator for the country of Panama, a huge employer. So I've got to think that ultimately there will be an agreement on this. Mm-hmm. We'll see how long the mine is shut before that is reached. Fingers crossed, it's not too long. In either event for us, even if there is production deferred for a while, it really is a deferral of revenue. We have in our business, there's no fixed costs related to the asset. If we don't get deliveries, obviously, we don't get that revenue now, but the ore doesn't go away. That ore gets produced in time. So it really is a timing impact for us for the most part.
Paul, I want to get your thoughts basically on the state of the industry. We're seeing the merger and acquisition activity obviously shining a light that projects are few and far between, gold is scarce, and mine life is shorter and shorter here. Let's talk the positive that it's shining on the industry. What is this M&A activity telling you?
I think you've pointed to a couple of the things. Permitting gold mines gets tougher and tougher over time. And finding new gold mines gets tougher and tougher over time. It means there's a real premium for good operating assets. And I think that's principally what's driving the M&A. How does that impact our business model? For any operating company, you can only focus on a certain amount of assets. And so the M&A cycle is in a sense, often a recycling cycle. Companies will acquire other companies, they'll keep the better assets, but then the smaller assets will be sold out of those portfolios. Often there have been good opportunities that have come out of that. One that I would think is when you get an asset like Candelaria coming out of Freeport. Right. Lundin Mining acquired that asset, often in the hands of a smaller company. They can focus on it. That's been a tremendous success story for us.
I want to bring up, I was watching a conversation Rick Rule was having at the VRIC, and I thought this comment was interesting. He said that the sector has been too conservative in capital deployment. He's speaking amongst the mid-tier and the majors. He says exploration pipelines are empty, development pipelines are empty, and assets generating cash are past their prime. Do you agree with that statement?
Well, I do, and just as you run through that, I can't help but think, because I think it's instructive of what happened in the energy space. 2, 3, 4 years ago, strong ESG demands with investors pulling capital out of the fossil fuels. As soon as you happen that, it has a supply impact. Now, it was exacerbated by the war, but those two things, saw a tremendous run on energy prices on the back of that. I think the same thing plays out in all commodity industries. When you go through a period of underinvestment, there's always a hangover, and that hangover inevitably is higher prices.
Just, I guess, to wrap, I'd love to get your thoughts on the gold price. I know you sit on the board of the World Gold Council along with Chair Randy Smallwood. World Gold Council putting out great reports, central bank buying, record. We've never seen this amount of central bank buying for gold. What's your take on central banks hoarding gold here, and what's this telling us?
Well, you've seen a good amount of buying, more buying by central banks than you've seen
ever.
I think in my lifetime, certainly. So that is a positive, and one of the drivers. But I don't think the biggest driver. Right. I think the biggest driver on the upside of gold prices is always investment demand, and so it's those macro factors. A couple of stats that really stuck with me, and the one is. In the 12 months after the Fed reaches peak rates in their rate-raising cycle, 5 of the last 7 times that's happened, the gold price has outperformed. I think we're close to that. The second is in terms of recessions. 8 of the last 10 times that we've had a recession, the gold price has outperformed. So I think the macro setup, the odds are we're going to see a good run in the gold price.
Well, we're starting off the year, highest price that we've seen in a decade. People wondering, will it be a repeat of 2012?
I think the macro setup is very, very positive. So
All right.
I
circle
can't
back
tell you
in
the
a-
numbers, but I think the direction is right.
Okay. I just final thoughts on the Fed. Where do you think they go from here? More tightening, a reversal? Just any insights?
I don't have a view in terms of, where the peak is, other than we're getting pretty close. And the market is usually forward-looking, usually 6 months. So once the market starts believing that we're six months from peak rates, that's when you'll see the gold price run up.
Paul Brink, CEO of Franco-Nevada, thank you so much for
Daniela,
joining me today.
Lovely to chat.
And thank you for watching. We'll have much more incredible coverage coming your way, so be sure to stay tuned. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.